Hey, everybody, welcome to another edition of the Daily Dealer Live. I'm your host, Dark. And joining me today is the car dealership guy, Yossi. Yossi, what's up?
Welcome back. Long weekend. Glad to be here.
Yossi, me, you, and today's guest, we've got the best of auto industry content anywhere online, in store. Well, we got the best anywhere. Welcome. And for those joining our live stream, we're live across all CDG social media platforms. So post those comments to all platforms. We'll bring them in today's show, and it will change the shape of today's show. Speaking of which, Yossi, check out what we have coming up today. Lonnie Soza, president of Post Oak Motor Cars, and Jeremy Beaver, CEO of Grande Dealer Group, also known as DGDG on the West Coast. But first, let's dive into today's headlines. So first up today, you remember that $1,000 a month payment ceiling that seemed so crazy high? Well, a record 19.8% of new car buyers in Q2 committed to just that, a monthly payment of $1,000 or more. That's up 17.8% from a year ago as affordability pressures continue to mount. But according to Edmunds, tariffs weren't the driving factor. Instead, more buyers are turning to ultra-long loans, 84 plus months, to keep payments manageable as prices stay flat and rates remain high. The average monthly payment hit, get this, $756 a month, while down payments drops to $6,433, and 0% financing deals fell below 1% of total loans for the first time ever. What's the bottom line here? Well, tariffs haven't hit consumer costs in a big way yet, but when they do, buyers already pushing loan limits will have little room left to absorb those new price hikes.
Sam, I'd be curious to know how much these payments have outpaced inflation, right? Because you're going to expect payments to rise, so I'm not too shocked we're at record levels, although the pace seems to be, going much faster than inflation had been. So that's an interesting point.
And not to say, hey, I remember when, but I do remember when. Like a $200 a month car payment was pretty average and normal, and that was kind of the benchmark. So to quote Anchorman, that escalated quick. So next up today, remember that $20,000 Slate vehicle? Well, Slate Auto is reworking its pricing strategy after scrapping its under $20K messaging just days before President Trump signed legislation ending the $7,500 federal EV tax credit. The Bezos-backed startup had leaned heavily into the sub 20K price point since its April debut. In fact, they did so here on this show as well, generating over 100,000 reservations for its ultra minimalist electric pickup due in 2026. But without federal incentives, Slate may price the truck closer to $25,000. Still low by EV standards, but a tougher sell for a vehicle that comes with no extras and relies on customers to bolt on features themselves. The stripped down model includes only the basics: one color, 2 seats, flatbed, a basic battery gauge. Everything else, including windows, sound, and roof panels, is optional. Who needs a window? Big picture, Slate has to prove that its bare bones, build it yourself model offers real value, not just a catchy price tag, Yossi.
Everybody's gangster until the EV tax credit gets repealed. So
yeah, take the government money
away.
away.
No, I wish them luck. I think it's an audacious take, but they're trying to bring something affordable to the market. So good luck to them, but it's going to be tough, especially, with the removal of the tax credit that's, impending.
Yeah. And finally, up in today's news, M&A activity. Sonic Automotive is doubling down on luxury, acquiring 4 Jaguar Land Rover stores in California that add $500 million in annual revenue, with locations in Louisiana, Newport Beach, or in LA. Apologies. I'm from the West Coast. I should have gotten that. With locations in LA, Newport Beach, San Jose, and Pasadena, the deal makes Sonic the top volume JLR group in the U.S. Meanwhile, in Texas, Ancira Automotive Group acquired Patriot Buick GMC in Killeen. As longtime owner, John Kluwer steps back after 34 years, citing rising manufacturer pressure and a fast-changing industry. Hage Partners, which brokered the deal, says buyers' demand across Texas is, quote, robust, especially for well-run GM stores, with interest coming from buyers nationwide. Further east, the Edwards family expanded their Birmingham footprint with purchases of Carlock Honda, now renamed Edwards Honda. The store joins their local Chevy franchise, giving them broad market coverage and deeper roots in one of Alabama's largest auto hubs. And Yossi, My question is, Sonic is buying these JLR franchises. We recently shared a post internally showing JLR's England production for the month of April 25 versus 24, and the drop was astounding. So it's interesting to see Sonic chasing the brand right now, Yossi.
Yeah, I'd avoid the J and JLR right now at the moment, but they are
Yeah.
look, they are trying to do a full transition to EV, right? That is their goal. This is why they've discontinued many of these, ICE models. And so the jury's out. I want to give them the benefit of the doubt. Let's see where we're at in a year and
Yeah.
two, and who knows. But at the current moment, it's still just a bunch of fugazi. Nothing's happening yet. They're still in work, so time will
Yeah.
tell.
Yeah. All right. Well, let's turn to our first guest today in this post 4th of July holiday Monday. First up today, we turn to President of Post Oak Motor Cars. Welcome to the show, Lonnie Soza. Welcome.
Hey, gentlemen. Thanks for having me.
Lonnie, welcome back, man. How's life?
Life's good. Life's good. Enjoyed this wonderful long weekend, and yeah, ready to start
You're in a beautiful showroom. Lonnie, how's the luxury segment holding up? Well, let's start. Tell us what brands you represent, and give us a little sneak peek into the luxury vehicle space nowadays.
So today we have Rolls-Royce, Bentley, Bugatti, Karma, Chevrolet, and Lotus.
Nice. Yeah.
Mm-hmm.
Yeah. Lotus has actually been very good. Yeah, I heard you.
Yeah, tell us a little bit about just trends, right? What's the pulse in the dealerships nowadays?
Look, it's been varied month to month. I mean, it's been kind of so up and down that we can't actually create a trend yet. I will say that year to date that we're up in almost all of our brands, including both in new and used, from a volume perspective year over year. Margins aren't as robust, but that's okay. Look, we're maintaining our presence in the market. We're gaining market share. I think that's exclusive to us in our area compared to our like branded dealers around the country. But we're so far so good for the year.
Lonnie, you mentioned Lotus. You mentioned margins aren't as robust. What's putting pressure? Is it the tariffs, or why are you seeing margin compression or margin pressure? Where's that coming from?
I think it's more of an inventory availability, and mostly on our other two brands, Bentley and Rolls Royce. I mean, there was a lot of Bentleys on the ground. We had a lot of 24s we rolled into the year with, and we're still very profitable. We're happy, so we're happy to accept the margins that we have on that previous model year. But that's the majority of it. Now we're rolling into 25s. I expect to see that we get back into the normal returns very soon. Rolls-Royce has been pretty good, pretty solid. There's really been no issues with Rolls-Royce margin. That one brand slightly down in volume year over year, but only because of an availability.
Wow. Now, and in terms of profile of buyer, what are you seeing? Look, stock market's at all-time highs, right? So, and last I checked, like 60% of US households own some stocks, likely most of it in their 401k. But I'm curious, like, is the profile of buyer shifting, or is it staying the same? Like, what does that look like?
I mean, it's been changing over the years quite a bit. As a matter of fact, I think some information just came out that, previous average age of a Rolls-Royce buyer was 65 when I got into the business 8 years ago. And then over the years, it had gone down to 45. And recently, they're saying that the average age of a Rolls-Royce buyer is now 35. So, yeah, I'd say it's a pretty big shift. And that lends to a lot of our volume increases. I mean, yeah, so we're seeing a kind of a mix of both. A lot of these young buyers are still able to pay cash. We're seeing a lot of finance opportunities. I mean, our finance penetration's been in the 50-60% range so far this year, which is tremendously greater than what it was trailing off last year, where we were more in the 30% range. So Yeah, again, it's been up. It's every month has been
Lonnie,
different
it's
results.
interesting because here at the Ziegler Auto Group, we just acquired a Ferrari franchise in the Chicagoland, Lake Forest Ferrari of Lake Forest. And we kind of saw the same trend you're describing, that the average age of a Ferrari buyer is much lower than it's probably ever been. I'm curious what's driving that. What's causing these younger buyers to come in for ultra luxury brands? And then maybe as a follow-up question, does it cause you to say, hey, we'd love more stores. We want to expand outside of Houston in that ultra luxury market?
Lonnie, before you answer that, I want to just give you like my young millennial perspective on this, right? I
Yeah.
talk to a lot of people. By the way, I just spoke with someone over the weekend who wants to come buy a Lotus from you. You may have already
Ooh.
spoken with them and connected. But if you haven't, you're going to hear from them this week. Separately, what I forget where I saw this posted, but someone was talking about like, hey, I'm young, I'm making money. I don't know what they're doing or what their job is, but like I still like I can't buy assets, right? And I think that there's, again, I'm really generalizing here, but I think there's something to it that assets have gotten so inflated that in many cases people are like, that piece of real estate or that whatever asset I want to acquire is at all-time highs. Maybe I'll splurge a little bit on myself, right? The delta is much greater than it used to be, right? The price, or let's just say the way assets have inflated has significantly outpaced just general consumable goods or whatever however you want to define it economically. And so I think in many cases people are like, you know what? Let me splurge a little bit, at least in my age group. This is just based on some anecdotes I've heard. But anyways, now I'll shift it back to you to kind of give your take.
It's a mixed bag there as well. We do a lot of crypto transactions, by the way. So a lot of that crypto wealth we see coming in. But COVID, this post-COVID transition, there is a lot more self-made millionaires out there than ever before, right? I mean, I remember seeing something a couple of years ago, shortly after COVID, at that time there was 1 million more millionaires in the world, and I'm sure that that's probably doubled by now. And we're fortunate to be in Texas, Houston, Texas. I think recently Austin was rated as one of the fastest growing millionaire towns in the country, as well as Houston. There's, I believe, over 90,000 millionaires in Houston alone. So what we've seen, and we get to know our clients pretty well, is, I mean, we've got clients that have started businesses, restaurants, you name, just real estate investments, so on and so forth. You name it. There's a lot of confidence was built after COVID about going out and starting a business and becoming wealthy. And then on top of that, we have our influencer base too. That's also multiplied. What was the second question that you had over there?
Wait, Lonnie, what do you mean? What do you mean by that? Our influencer base? Are you saying like internet influencers are buying more vehicles from you?
Yeah, we've seen an increase in some influencers coming in. It's amazing. These are young kids. You would never in a million years guess that they were there to buy a car. And of course, we have our approach when we greet clients walking in the door is never to have any judgment whatsoever. And so it becomes very surprising when someone ends up turning around saying, "I want that car."
Yeah, and frankly, I think in many cases it's a tax efficient strategy. If they're using this in videos and to create content and all that hoopla, I think that it's not straight consumption. Like it just gets factored in. But Sam, kick it off to you. I know you had a question there.
Yeah, just curious if you would be looking at additional ultra luxury brands. And by the way, online social media comment also along these lines. Brain Rot AI, great name, is are there any brands that younger generations are shifting to more than ever before that you're surprised by? And how does that change your marketing strategy? So is there anything that surprised you with the shift? And would you be out looking for additional brands in that ultra luxury marketplace, Lonnie?
Yeah, absolutely. We've been on the hunt for a few years. As a matter of fact, our strategy right now is, as far as anything outside of Texas, we'd love to stick with luxury and up. So Mercedes, BMW, all the way up to ultra luxury and exotics. Outside of those brands in Texas, we're very open to more domestic and import brands, a little closer to home. Just a little bit more manageable for us. But we feel very, very confident in our ability to run luxury and exotic stores. So we'd like to see some opportunities, both East Coast, West Coast, every
And
direction.
hey, and well, a follow up to that. How are you mentioned crypto. Someone, and Alex Cardano asked this question, but how are you accepting these transactions? You said if you take a lot of crypto, are they converting this to fiat first and then, or are you doing like straight crypto transactions?
No, we do use a third-party company called BitPay, and we have the choice when we're taking these transactions to convert to U.S. dollars on the spot or to accept it in crypto. And over the years, we've done both, and it's been very lucrative for us, both in allowing us to do transactions and also building a portfolio on the crypto side too.
Mm-hmm. And do you advertise this? Like, do you like promote that? I'm just putting my marketing hat. Go ahead.
Yeah, no, we do. Yeah, both on our website and we do social media advertising as well.
Excellent. All right, Lonnie. So I want to transition the conversation slightly. I know your connection's a little funky. So hopefully we can still hear you fine. Talk to us just a little bit about like where's the puck going right now in your space, right? When you think about brands, programs, what's going to be hot, where you want to deploy your time, resources, capital in, what brands come to mind, what programs? I mean, what can you share?
We're seeing a lot of movement and activity in this Bugatti type space, right? And these multi-million-dollar cars. We're heavily engaged with these ownership clubs, not just in Houston and Texas, but we're all over the country. And so we're actually expanding that portfolio to include brands like Zinger, Zenvo, Hispano Suiza. These are all multi-million-dollar price point cars, and we're building. As a result, we're building a standalone retail facility not too far from our current location. That the main building will be Bugatti, and it'll be kind of the only standalone Bugatti store in the country. 18,000 square foot, 2-story building.
Wow.
And so we'll have those brands on the rooftop, but on top of that, we'll go and support those brands with getting more into used exotic cars. So carrying more Lamborghini, Ferrari type stuff that
Well, Lonnie
haven't done
Soza,
really
we
before.
appreciate having you on the show today. A little bit of a technical difficulty. So it is interesting, even in the ultra premium luxury brand, we still have technical issues. So, but we appreciate you being on the show, and we absolutely want you back at some point because we'd love to hear the rest of your perspectives and wish you all the best. It'd be more fun to hear more about, in particular, your Lotus brand. So, Lonnie Soza, President, Post Oak Motor Cars. Thanks for being on the show. No, it's all good.
Thank you, guys. Sorry about the connection.
Thanks, Lonnie. Keep crushing, man.
One of my favorite comments in the world
Bye.
is we put a man on the moon, and today, even in our post-COVID Zoom world, we still end up having IT challenges, which is not a big deal. It's just a fact of life. So
I know.
But what a fascinating
it was
guy.
working fine. Yeah, it was fine
Yeah.
before that. But I mean, yeah, and just to see the luxury segment performing that well, and it's pretty fascinating, especially with how it's shifted to a younger demographic.
And when the Bugatti store is up and running, we want him back. So, Lonnie, if you hear that, we'd love to have you back. So, well, let's turn to Industry Pulse. So, today's Industry Pulse, Yossi, and to our audience, comes from
What do we have, Sam? What do we have?
Jasmine Ulivari. We're going to actually go through this post, points out the lack of financial planning for dealership employees in her mind that will allow for normal retirement age. Now, I just want to share this post. I'm going to actually go through and read this for a moment and then get your take on this, Yossi. So, Jasmine posted and said, yesterday I walked into a dealership because someone requested to see me. As I was walking in, I noticed most of the sales managers were over 50. Interesting thing to notice. When I asked them how much longer they plan to work, they all said forever because we don't have a choice. That was the saddest thing I've heard this year. In the auto industry, we're taught to work hard, make money, and that's it. Meanwhile, the owners are banking, they have investments, exit strategies, and future plans, but their employees, they're left with the short end of the stick, she says in her post. This is not me, her No real plan, no protection, no roadmap for retirement or legacy. Owners should be bringing in wealth management teams, she says, to educate, empower, and protect their people, not just pretend to do them a favor by throwing them $500 into a 401k once a year, she says. At that moment, I realized God didn't put me in this seat just to make money. He put me here to change lives, to break cycles, and to show people they do have choices. They just need the right guidance. You don't have to work forever. You don't have to die at your desk. You deserve a plan, a legacy, and a life beyond survival. What are your thoughts? And then not one question mark, but five, which in my 50-plus-year-old brain, it shows some intensity. Yossi, what do you say about this post?
My perspective might be a bit old school, but bear with me here. Look, first of all, owners shouldn't have to do anything. It's a free market. You
Yeah.
have incredibly progressive dealers nowadays, and by progressive I mean doing things that are, pushing the envelope forward and investing in their employees. I mean, for like, you look at you, right? You guys have a university at Ziegler, right? Where you
Yeah.
train your teams. These are
Yeah.
things that did not exist in the past. I mean, these are, and you're not the only one. There's plenty of other dealer groups that are scaled that are making these types of investments, right? So I would say that, first of all, there's I don't believe that utopia or like the retirement is this like golden thing. She used the word die at your desk, which to me felt very negative. What if this person loves doing what they do, right? What if they want like what's better for them than to work at what they're great at? Do they want to sit at the beach all day? If that is the case, then you're right. They maybe need to consider a different path. But I think that we are in a capitalist we're in a country that functions on capitalism, and these owners took lots of risk and built these businesses. And so, sure, you're going to gain some more capital and financial independence. I just think that it's a very negative take on how employees might be treated at top tier dealer groups. Are there dealer groups that are way behind and need to, you know, take several leaps forward and improve if they want to survive? Sure. But this is why the free market's great, because if they don't, they're going to get eaten up. They're going to lose market share. They're going to end up going out of business. And so all in all, I agree that investing in your teams and employees is great. And I think that the industry at large is doing it at record levels. I also think that she's painting the entire industry in a very broad brush. Look at Carter Myers, for example, who has an employee equity plan for their teams. That includes the real estate. This isn't like a BS equity plan. This is like a legit equity plan. So I'm just saying, I think it's a little generalizing. I think she's coming from a good intention, just to be very clear. I don't think she's like trying to, say harm any dealer group or anything. And by the way, she's a finance director at Morgan Auto Group, who's a phenomenal group that really invests in their teams, which is maybe why she sees it that way, that she says, hey, I'm used to this and not that. But anyways, that's my take. I think there's a lot of nuance to this. I think investing in your team is an amazing thing, but I also think we shouldn't just assume that if someone says I'm going to die at my desk, which is a very hyperbolic statement, that's very kind of, just dark and kind of grim. We have to kind of put that in perspective and say, what does that really mean? And, what are the implications of that? So that's my take.
Yeah, and I'm kind of with you. This is a free market. Individuals need to take personal responsibility for things like their retirement and their own personal development. In my world, Yossi, I'm always fascinated by how what few percentage of people out of the general population out there are running towards bettering themselves financially, physically, in all aspects of life. And really, a great leader, a great dealer group, I think your responsibility is to help inspire people to come after it, but you can't force people to come after that education. That's one thought. The second thought, she's a finance director. She has got to know and realize, reviewing so many credit applications, that in automotive, we have higher average incomes than most industries out
That's a
there.
great
We are
point. Yeah.
enormously blessed by the income and the opportunity we have. And if you don't capitalize on that opportunity, it's kind of on you. And then maybe the third aspect, I would be shocked. I don't know what dealership she walked into. I don't know where she got the comment. I'd love to see it in the comments today on today's show if you have an opinion on this. I'll bet on that showroom floor with those salespeople and sales managers, there are millionaires on that showroom floor who've invested in real estate, that have made smart investment in equities and other places, who choose, to your point, Yossi, to work because they like the business and they want to work, but are very uncomfortable answering a person who comes in and says, hey, what are you going to do to retire? Say, hey, you know what? I'm a millionaire. I'm comfortable. I don't need to work, but I choose to work, because most people don't want to show that side of the industry to any customer walking through the door. So I do think there's a need for more education, but the need, Yossi, isn't in automotive as a narrow segment. The need is broad across all of America. Most Americans don't understand that true value of the dollar, compounding interest, and the ability to invest and grow yourself. That's something that needs to be taught, but it's not something anyone is owed. It's something that we should go after because you have a personal desire to do it, Yossi.
Before you move on, Sam, you mentioned compound interest.
Yeah.
As a personal blind spot that I've noticed is that I've realized the power of compounding so starkly in my personal and professional life when it comes to relationships and businesses and stuff like that. The one thing where I've struggled is in liquid assets. I am so bad. Like I tapped a financial advisor, and a big portion of that was literally like emotional management, because I'm
Ooh,
so
yeah,
bad with liquid assets, literally like
yeah,
S&P 500, right? I'm
yeah,
not like flipping stonks and stuff like that.
yeah.
Not interested in that. Don't have time for that. But liquid assets. So, anyways, the point I'm trying to make is you're right. Like compound interest.
Give us an example of a challenge on liquid assets. We can't let that just fly. I
I
don't
mean,
know what you mean by that.
well, S&P 500.
Yeah,
Like go buy the S&P 500. You can sell it tomorrow. Like it's it's tough, that emotional management, if you don't create some buffer for yourself, unless you're like insanely disciplined with that stuff. But S&P, anything that you can literally open your phone and trade it on the spot, right?
got it.
It's a difficult thing, which is the beautiful thing about, by the way, businesses, dealerships, right? Stuff that is illiquid, or real estate, right? It's a lot tougher to sell. It's like
Yeah.
it's a lot more friction. It takes effort. So, anyways, I think it's important to know your blind spots, and I think to that point, kind of educating the public on compounding, not just with capital, but in everything. I mean,
But
dude,
that's
this
not
freaking show,
automotive. That's everywhere.
that's everywhere. But
Right?
you mentioned
Yeah.
compound interest,
Yeah.
and so it just got me thinking, just that, going back to the education piece, right? Everything compounds. Everything
Yeah.
good compounds, at least. And I mean, this freaking show compounds, right? Look at
Yeah.
the listeners rise every week, and it's just consistency. So
Yeah.
that's a
Yeah.
little sneak peek into my personal life.
That's a great point. So, by the way, anybody disagree or have an opinion on the state of financial management and automotive, we'd love to hear it in the comments. We'll bring it up as we get towards the end of the show. But thank you for sharing that, Yossi. And to your point, I still own about $10,000 worth of Ford stock from '08 when it was about $1 a share, right? And to your point, I haven't sold it yet. Do you just buy it and you hold, right? Which is terrible. That's not a good strategy, but it's what
Sometimes
you
it
do.
is, though.
So
Come on, sometimes it is. But I'm just not
sometimes it
into like
is.
picking single stocks
Yeah, yeah,
unless
yeah.
I run that stock and operate that stock, or it's
Yeah.
just tough, man.
Yeah. Well,
To each
speaking
his
of
own.
stocks and compounding interest in relationships. So, today's episode of the Daily Dealer Live is brought to you by Impel. Dealers everywhere are delivering concierge level customer experiences with Impel's AI operating system. Learn how to ditch disjointed customer engagement at Impel.ai/CDG. If you're watching the live show, you can click on that QR code that's off to my side. If you know how to do it while you're holding your phone, even better. But thanks to Impel for supporting today's show and making much of today's content available to everyone via
Let,
this live stream.
let me tell you, Impel has this company has gone through an incredible evolution. I mean, I swear, I think I was one of the earliest customers, not when it was even called Impel. It was called Spin Car. And we
Yeah.
had implemented their, little merchandising tool at the dealership to, to give you the 360 view. I mean, but talk about a company that's grown and evolved.
Yeah.
And I mean, they've made acquisitions. So they're super, super impressive team over there, and leadership. So I'm very bullish on what Impel's doing.
And we've
That's
had
my
them on
little
the show. So, yeah,
personal endorsement there.
I
Yeah.
love it. All right. Well, next up today, let's turn to CEO of Del Grande Dealer Group, also DGDG. Welcome to the show, Jeremy Beaver. Thanks for being here.
Hi, guys. How you doing? I mean, you guys have covered a lot of topics here already. I mean, we got Ferraris, we got stocks. I mean, let's go.
I know we got into some topics that we don't typically get into, so it's got to keep it fun for the audience. I'm pretty sure half our, if not all of our audience, is over there flipping some coin or something at a certain point in time. you know it's the top when like you have like your grandpa or someone calling you asking you about something. You're like, now I'm getting worried.
Actually, that even brings up, we didn't even mention online gambling, which we probably shouldn't, but that is also, you
Oh,
take like super high risk personalities and wanting to win big. I think that's if we should do a show about anything, what percentage of auto sales managers, salespeople will do online gambling, right? So, and we won't ask you that, Jeremy. We're not going to
Yeah,
ask you that.
hours of the day. What are they doing at the dealership? Well, it'll
That's
be
right.
a new spot. It'll be great.
Jeremy
That's right.
Beaver. Jeremy, how
Welcome.
our classic question, how's biz?
We're just trying to figure it all out, just like everyone, like Lonnie, kind of month by month right now, trying to determine, what's happening with the government and tariffs, and in the heart of Silicon Valley, that stock market's going up and down every day. So we're living the dream, but we're trying our best with our 1,000 team members, and just making sure we do everything we can every day. So life is good.
Jeremy, prior to the show, we were discussing your segment, me and Sam, and we sort of think of you as this canary for the auto industry of where the technology is going. You are in the heart of Silicon Valley. And so, I mean, first of all, you have the consumer base who is likely most just adept and open to some digital experience or AI driven purchase, right? Like you are the future. They say like what happens in Silicon Valley happens everywhere else within 5 or 10 years later, right? Like just let's give Uber as an example, right? Started there, expanded everywhere, took a decade. Um, Tell us a little bit about just today at your store, right? Like what is the buying and selling and servicing experience look like? Just give
Yeah,
a
I
high
think
level overview.
Yeah, I think it's maybe good or bad that it starts here, When it's a good trend, we like it. When it's a little tricky, then, who knows? So, we're obviously in the heart of EV world here. 30 to 40% of all vehicle sales have some alternative powertrain. Obviously, with the news last week, it's going to get a little bit tricky on that $7,500, as that's one of the large drivers for consumers here to get the carpool lane. There are charging mechanisms here. People are used to. They do have range anxiety at times, but not as much in the country. So that is a trend that's going to be very volatile over the next 90 days. But for us, I think the fundamentals in the car business are still very similar across the industry. Having an unbelievable team that can provide a world-class guest experience for people that are buying and servicing their vehicles. We just try to really kind of double down on the technology front. So that comes into high use of iPads, high use of technology through communication, a lot of data that we use. We have full-time data teams that are running algorithms for business intelligence. So it's maybe just a little bit heightened, but at the end of the day, it's blocking and tackling, it's selling cars. We think about it really in a way that we call culture tech. The technology needs to be world class. It needs to be modern. It needs to be, just like everything else you use. But it really means nothing unless you have humans and teams that can execute on a day-to-day basis. That's really where we believe the 1+1=3 strategy lives here in the future of car dealerships.
Jeremy, if you're still bound by the car gods, right? And the rules of the game. But if you are, let's just say, some months or years ahead of some dealerships across the country when it comes to tech, just deployment execution, what would you say is you mentioned, sorry, you mentioned the need for or people, right? How important is that still to the customer experience in your store? Like truthfully, give us that insight to the human and just the interaction. How important is that really? If you are, if I'm assuming you're leveraging all the stuff out there, so I'm curious to know how that's kind of being used in your store.
Yeah, well, I could be horribly wrong, but we think that the humans play such a vital role in this business still. It's a very tech forward strategy that's moving, but at the end of the day, people want to come see a car, they want to come test drive a car, they want someone to talk to when they need it. It's a big purchase. There's all this new technology in these vehicles, and so we believe the human aspect or our team aspect is the most critical function. With that being said, we believe that technology should create extreme efficiency and extreme performance in a go forward model, especially in these businesses. When you think about the cost of land, the cost of buildings, the OEM requirements, all of that stuff, it's not getting cheaper. And at the end of the day, margin, when you're buying and selling a car, it's not that great when you think about all the effort that goes into it. And so we really believe that blend is how the future of automotive retail is going to work. So think about someone instead of selling 12 cars, they need to be selling 15, 18, 20. They need to be, it needs to become more of a career that can continue to grow. We focus a lot on career development. Just like you talked about with Lonnie and with the other large groups today, the Morgan Auto Group, they are focusing on development and leadership training and opportunity for growth and being able to have the automotive sector that doesn't have this 50, 60, 70% attrition that is really a bad model for everyone. And so we're using tech to scale, and we use some automotive tech, but we're focusing in bringing non-automotive tech that every other business uses in the world today into automotive. And so it becomes this kind of single-minded platform strategy that's through consumer journey plus employee retention and strategy.
Can you double click on that? What do you mean? Like, what actual tech are you bringing to your store? You mentioned earlier you have a big team of data scientists, which I wanted to dig into that, but let's just start with this. What's this non-automotive tech that you're bringing into your store?
Yeah, I think the first thing that everyone, like, super hot button, the word of the day or the word of the quarter is AI, right? Like, everyone wants to use, like, throw AI into whatever product they're selling. The most important thing we believe in AI as it moves forward is the data on which it lives into and which is normalized from all of these sources. In automotive over the last 5, 7, 10 years, each dealership has 20, 30, 40 different sources that they have data. None of it is normalized. None of it comes together in any sort of central hub. And then everyone is either marketing or communicating out of 5 to 7 of them. So it's not necessarily a proper data set when you want to utilize and maximize AI. Especially when you talk about like agentic AI that can learn and can grow on its own and then actually be able to have, different models that are running out of it. And so that's what we're really focused on, using large scale models in, today we use Azure as our data lake, but using it as a central repository that can then essentially operate our business, whether that's predictive financials, whether that's predictive demand, or in future customer communication. That's a really, really important piece for us moving forward.
The $10 billion question, what are you building in-house today? Because to me, when I hear you're a dealer spending time building stuff in-house, that's expensive, that takes up your time, and that's an opportunity. What are you building in-house?
Yeah, I think call it consumer journey models. That's the easiest way to say it without breaking all our NDAs and secret sauce that we have here. But think about if you were a consumer and you were able to go and have this either My Garage format, or you had an ability to have a relationship with a dealer, whether it's your current car, what it's worth, when it needs service, your household, individual offers, all of the different things we believe are really, really valuable. We believe in the future, what is even more valuable is when we start to layer automotive industry data plus OEM data. And so think about the ability where an OEM can connect to consumers on really A to Z, from the time the vehicle is built and when it's ordered and deposited, as against to all the way down from when they're servicing their vehicle and they're looking for their new one. We believe that marketing journey and that communication journey is what is going to drive retention in the future. And it's not necessarily just with the retention on the OEM, unfortunately. I've been doing this for 20 years or a little bit more. And so when you think about before, it was like, well, my brother's dad only drove X brand, and so I'm only going to have these cars. That's not how the world works, right? They're looking for the newest people are looking for the newest, coolest, best cars in tech when they come back into the market, or longest range, or greatest strategy. And so we believe groups like ours, whether it's regional groups or super regional groups or the publics, they're going to it's going to be retention to the brands and the dealer groups with the brands, with the OEMs. The partners, our OEM partners, are very, very important to us. But the more scale we have, the more that we're actually going to be retain the customer, not only for the brand, but for the dealer group as well. And so we really focus on that for a long-term cycle. That also then bleeds into fixed operations. And so people don't really want to drive 60, 70, 80 miles to go get their oil changed. They want to be in major metro markets, have world-class service, and then that is going to really complete the ecosystem. And so we're focused on data sets that really look for 1, 3, and 5-year journeys, which we believe really build the value. You take that for our dealership, just to, sorry, go a little bit more,
No,
take
please.
a little bit more. That's what we think actually also builds value in these dealerships and dealer groups in the future. So today they trade on multiples of EBITDA, 4, 5, 7, 10 times. When these dealerships have significantly different value in the future because of technology, and they start trading more like tech companies or SaaS companies, that's where they also become the ability to invest in larger and different scales. And so we believe that's another competitive advantage we'll have in the future.
Dude, you're like, I'm hearing you speak and it's like 4 or 5D chess, right? Let me break this down for a second, and then I want your feedback. Your take is pretty simple here. It's, hey, we are all in on improving and extending retention of the customer. If we retain these customers for longer, that will increase the lifetime value of that customer and make them more valuable to our store. If we do that, we are essentially, if we can achieve that, we are essentially creating a SaaS-like business, because that person is coming to buy a new vehicle every couple of years. That is a much valuable business to own than a business that is a leaky bucket, or that customer is buying one car and never returning, or maybe 1 in 10 is returning, or whatever. And so your entire thesis is, and here's another important point, which I heard you say, is most of what I've heard you say is you're focusing a lot on the customer communication piece, the front end, which is, I would say, contrary to what I expected you to say, because I was going to say, what's more important, AI in my front end, like, consumer facing, or back end, my DMS, inventory, stuff like that. It seems though that you believe, based on your actions and where you're putting money, that the back end will be solved in large part by the industry and by vendors, but the front end is what you're saying, I want to control this and own this process to the atomic unit, and the only way to do that is to build it in-house. And that's why financially it pencils out, because I believe I can expand that lifetime customer value with my customers and keep them coming back. So everything I just said, right, wrong? Did I miss anything?
Yeah, I think pretty much spot on. But I think we've spent the last 3 years really focusing on data aggregation, and so we're a little bit ahead of probably the industry on being able to aggregate all that back end data you just talked about. We've had that. We run our own financial systems. We run our own kind of propensities on inventory. We run a lot of that, and so we're definitely moving towards more a consumer focused view when it comes to how people want to be communicated with. And so maybe we're moving on to the next piece. I think it is critically important. While AI and tech and communication is important, every day what starts at DGDG is our team. And so 1,000 team members, how do we make their job better, easier, higher performance, more efficient? How do they make more money so they have longevity plans? How do they communicate with guests better? I mean, we have full-time personal development leadership coach. We have full-time training programs. Wow. We have dealer academy. So as much as we talk, we're known for tech in the industry and in the heart of Silicon Valley. We are as much, focused in the people or, human culture development as anyone else in the industry while we're doing this tech. So that's really the what we think the secret sauce is being able to do both and being ahead. And that's what will really create longevity as we continue to scale.
Would you ever pull off a Jeff Bezos and take your cost center, turn it into a profit center, right? Would you license this stuff to other dealers? You mentioned trading on SaaS multiples. I mean, you're building a lot of this in-house already. Is there a joint venture, or is that something has to have crossed your mind at some point?
It is. We're well versed in the tech space. We got quite a few partnersps that I won't put on this show for you right now. You'll see, but we build our own tech. We sell some of our own tech. We partner and do a whole bunch of stuff. We invest in a lot of early stage automotive tech. That's part of one of our arms at DGDG Tech. So we're in there, but I will. I'm not getting anyone in trouble right now. So
Jeremy, along those lines, we have a comment from Social Adam Swithin asks a great question. Love the idea of maximizing a CDP and analyzing all the data to increase retention. How much do you anticipate to have to invest in the CDP to make this happen? Budget question.
Yeah, I think for us, we do have structure around CDP, but again, I'm going to say pretty advanced on structure on data and being able to have flows through marketing clouds and also through CRM data, DMS extraction plus industry data. I think if you were a dealership or dealer group, I would be definitely looking at a CDP, making sure that you have the ability to create the segments and the silos that you need. But at the end of the day, the CDP is just going to normalize a lot of things. The consumer journey build out is very robust. If done wrong, it doesn't work well, and if not managed on a day to day, especially we're in California, so everything's legal here. You got to make sure that you're really doing an amazing job to do that. I think if you're a standalone single point store, vendors and partners are the most critical way to do this today because
Yep.
it's just
Have to.
it's
No
easier,
scale.
faster, it's scale, and why screw around with normalizing data from all the different sources?
So what would you say to a dealer group that's larger that hasn't adopted a CDP yet, that's kind of behind the curve on that? What is the urgency or what is the need for that? What would
I
you
think
say
about
to
it. Yeah, I
that
think
group?
about it in two ways. I think there's an unbelievable opportunity for marketing efficiency. So what the dollars that you would put in, you should be getting out 3, 4, and 5 times out when done properly. You think about, people say email is free, but email's not really free. It takes a lot of work, a lot of scrubbing, a lot of
Yeah.
deliverability, a lot of content creation, a lot of dynamic ad insertion. So it's not free, but when done properly, when you think about open rates, click-through rates, engagement rates, when you can boost those by 10, 15, 18%, you can really start to have those retention mechanisms. You can start to create your own sale mechanisms. There's a lot to do when you operate a CDP. And so what I would say is if you had your block of advertising and you spent X amount of dollars, I would be looking at your low 10%, your low 15% now, and start taking that out and investing in data aggregation or data normalization so that you can then boost your advertising in the future
And
because it's not an easy journey.
and with all the different companies and vendors that are coming out of the woodwork, I think this is fascinating. You're playing checkers in this digital space, in this tech space. You're in an area where and you've probably got a lot of people around you who are very well versed. Which vendors are there any particular vendors or steps you would take initially if you wanted to undertake a project of creating this CDP or doing some of the other things that you're farther advanced down the road
Here
doing?
comes the
What advice
plug.
would you
Here
give to
comes
our
the
dealers?
plug.
Yeah.
There's no,
Well,
there's
no plug. I'm just curious. Yeah.
Yeah, there's no plug here. I think that again, what you dealers have to figure out
Yeah.
is what they want to do with their kind of entire suite of products. I think
Yeah.
that adding just another software and another technology to log into and manage is like going to be the death of the car dealer because there's already like 40 to sell a car and 30 to like market and all these other things. So I think that getting into platform type strategies is going to be really, really important for automotive over the next 1 to 3 to 5 years. But there are large companies. I think, you got Impel listed here. We were early spin car as well. I think that they've come a long way. These are guys are like technologists that are over there. They're like insanely good. I think the guys that at Treasure Data with Clarivoy are doing really good stuff with data and marketplaces. I think Cars Commerce is working on a ton of different stuff on aggregating their companies. Like, I think that there is like everyone is saying this kind of hub and spoke strategy is way more important in the future as opposed to 30 different vendors or 30 different platforms. That's a really important piece here.
So the one question that comes to mind, especially in the shadow of the CDK outage last year and data protection and hacking and all the other things, who owns the data, who protects the data, who has the liability with the data? The question from Ryan is super relevant here. From social, with building your own technology, are you holding on-premise data stores? Are you putting everything in the cloud? How do you think different about the protection of your data than a vendor might? Because a lot of these vendors that are creating these services for you will say, "Hey, we take on that liability by creating this service." You're preserving that liability within the group, I would imagine. Like, how do you think about that?
Yeah, two stages. Data security, obviously critically important. We are a CDK group, so everything's on CDK. So there is, data storage around that. And, we were one of the dealers that went through all those things. I would tell
We were
you,
too.
pretty
Yeah.
crazy. It was a year ago. We had
Yeah.
so many redundant systems on data that we were not really impacted too much because we had the ability to go extract our own data and operate our own systems, which was, knock on wood, nice at the time. Our data today sits in, we're a Microsoft shop, so we operate everything on the cloud, but there are redundancies on data backups because, clouds do go out and things, there's different server farms and different items. And so we kind of have a mix, like a hybrid, but most of the large processing is done cloud-based just because the size of the data.
So the CDP that you created, is that what gave you the backup? So when the CDK outage happened, you were able to still pull customer data and CRM data and RO data and preserve operations? Or how did that work? What was your redundancies that were created as a result of the systems you
Yeah,
have up and running?
it's a little less CDP and a more kind of data lake structure just because it has so many different flows. And you think about, service data, sales data, aggregation data. CDP we use a little bit more for customer segments. That's really just the items that we use through a marketing function, marketing cloud, or communication channels. The data needs to be raw in format when it comes, but structured when you utilize it. So it's more necessarily in our internal kind of dashboarding, what we call DGDG dash, which enables our financials plus our operational tools.
Jeremy, biggest challenge for you nowadays?
God, someone tweeting out and changing our lives in the auto industry every 20 seconds. Yes,
no doubt.
That's legit. I mean, that's a navigating expectations, marketing messaging. I get it.
Macro trends. I said that's the big one. I mean, this year we've had tariffs on, tariffs off. We have EV for us is on and off. I think tariffs just got changed again in Japan here, a little bit earlier. So the brands that are there. So, we try to focus on the controllables. What can we control? There's been a lot of uncontrollables already this year. And so what we can do is make sure we have an unbelievable team that we support, train, and coach every day. And then, continue to build our tech to create more efficient, performance-driven operations. We are car dealers. We are tech entrepreneurs as well. But at the core of what we do, we sell service cars with our team. And so that's what we're going to focus on every single day.
Very, very insightful. Go ahead, Sam.
No, I just think it's interesting. I know most groups want to keep a lot proprietary, but as you venture down this road with technology, with AI, it's fascinating. Most of the dealers that are watching this show right now are overwhelmed by the number of AI solutions and technology solutions that are out there. And to your point, the North Star in automotive needs to be that customer and supporting the employee, a person in delivering the best experience to that end consumer. And at any moment when the employee competes with the technology or competes with the AI, it breaks. And I've seen it in my own world where an employee will misunderstand the purpose, the intent of that AI or that technology, and then it breaks it. And I'm just fascinated by all the different things you're doing to help deliver a better experience and better tools to your employees. And as we wrap, if there's one thing that someone who's not in Silicon Valley, who's not surrounded by the type of resources that you are, should be doing right now, what would that thing do? What would that technology or that AI solution or tool be that could help their employees deliver that best experience to their customers?
Yeah, Sam, well, you're spot on, by the way. We have some of the best ideas we draw on the whiteboard, and they sound great and they're technology. And then when it comes to people using them, they don't work, they break. It's completely worthless. We make more mistakes than we win, just so you know. There's a lot of those going on here. But I think, what I continue to give dealers, and we're sharers, right? We want everyone, we want all boats to rise. We want the industry to continue to evolve. We really focus on, if you were a dealer to get into the space, you need to make sure that you can, whatever you want to bite off, make sure you can chew it. And so if you want to get into marketing, then take it and take it in small form, reduce it to its simplest form, and then take that on. You don't just go and jump in and say I'm going to do all of these things all at once. Make sure you have a culture of change. Make sure you have a culture that is ready to adapt that change that you want, but really make sure that you're doing things that fit your business. Don't take what I've just said and try to go do it. We've been doing it for 15 years, building it from scratch. I said, people know we're going to try stuff and it's going to break. That's our culture. If your team doesn't want to go do 5 more new softwares, don't do it. Do one and do it really, really well in a basic version. You will get more performance and adoption out of that than anything else.
So as we wrap, just one last question, because I think this is a fascinating question. If you could redesign a car dealership, a single point dealership from scratch, from ground zero, what's one thing that's traditionally acceptable in automotive as core to an auto dealer or core to running an auto dealership? What would be the one thing that you would eliminate or the first thing you would eliminate from that
Yeah.
core?
It's like a 16-day conversation offsite that we could have. But
Let's
I think
go.
if I had one, that could be the new CD. That's it. They could go off and have
Yeah.
like a summit. It's another
Yeah.
business model we got today.
Yeah.
Another
I think
business.
if I had one item is if there was ever a situation where if you opened all these dealerships and there was one system, right, where you could go out and it would just do everything. So, kind of like a real ERP that other businesses operate on in modern tech stacks, where it would do sales, service, connect to the OEM, where, it would do all of it together. That would make it so much more efficient for the people
Yes.
and a better
Yes.
consumer journey. I don't even know if that happens in my lifetime. I know a couple of, probably your partners and vendors they've been trying to do it. But what what needs to happen is the dealers, the OEMs, and the partners have to come together as one. And I think they're getting closer and closer every day, but
Yeah.
it still gets tricky because everyone at times thinks they know best and want to do their own, program. So that would be that'd be my holy grail or dream, my unicorn. But we'll see if we can help contribute to that a little bit at DGDG.
There's the call
Incredible.
to action within the industry. Jeremy Beaver, CEO, DGDG, Del Grande Dealer Group. Thanks for being on the show and sharing your perspectives. We appreciate it.
Awesome. Thanks, guys. Really appreciate me having me, and we'll talk soon.
Thanks, Jeremy.
Fun show today, Yossi. It's cool to hear all the things that they're working on. And truly, there are some groups that are so much farther ahead in some of the ways they're thinking. It's neat to get kind of a preview of that.
Let's also put out a quick call to action here for the audience. We did 2 guests today, so let us know your thoughts on that. If you prefer 2 deeper conversations, 3 conversations maybe not as deep, 2 versus 3, shoot us an email, leave us a comment, shoot us a DM. Let us know your thoughts on that. We'd love to kind of get your feedback.
And to everyone out there who's watching, thanks for watching this Daily Dealer Live, where we break down the biggest moves in the auto business as they happen. Don't forget, we're here every Monday, Wednesday, and Friday. So we're next up Wednesday. So if this is your world, hit like, subscribe, turn on those notifications so you never miss a beat. And we'll see you next episode.